Throttle traders. Today I want to take a minute and break down a perfect trade setup. And if you're not looking at this style of trade setup, you really are missing a pretty high odds type of play. Stay with me for a second, and I'm going to walk you through the basics, getting in, how to manage the trade straight through. Great play here today on CAVA. So as I mentioned, the trade I want to break down for you today that we took in our room today was CAVA, C-A-V-A. Now, there's a few things in the setup you need to understand. Number one, if you're trading, if you're looking for 3 to 5 times what your risk is, so we call that trading R. So if you have a dollar stop, you're looking for a $4 move, positive move that direction, you probably are going to get whipped out of these stocks in the current environment if you're trading too soon. We trade early, but we trade very scalpy. We're a lot different type of traders between 9:30 and 9:50, or let's say 10 o'clock. And the reason being is things are moving around quite a bit here with just the rate of change in the market, where the stocks are a little bit choppy here. A lot of news driven here in the recent news with tariffs and the way the market's responding to that initially. But so that first 30 minutes, I'll do a whole nother video on that. I'm talking about that trade when you've taken your time, you've sat back, you've analyzed the perfect technical trade, you've waited on that trade to begin to kind of come into play. This is the style that you want to kind of look for. Now, let's take a look at CAVA real quick in the sense of where we are gapping from. Number one, the thing you should be focused on, the reason this hit our gap list today, and there wasn't many, was what if you're gapping north of a 50% red bar, if you're thinking long, you're gapping up in the air, you got some shorts covering. Now, it wasn't a wide range bar like this, and it had a little bit of a tail, so it kind of dampens or loses some of its width in there, but it was still one of the better gaps this morning, and CAVA's been on the move here of late. So I'm going to break this down, and again, part of the reasoning for this is just to be able to help you identify maybe what some of those early gaps look like. Put them on the back burner. Keep playing your breakouts or breakdowns. Be a little bit more proactive in that. Get that stop to break even, and some of those will go. So we have a whole strategy for that. Again, I'll share that with you sometime. As I'm moderating the day trading room, we spend that first 30 minutes taking those more frequent opportunities to get stocks going, get our stop to break even. Some of those go, because if you're in early enough, they will go 4, 5, and 6R. But we don't bet the farm on that. So when we start to come back, we start to do the add model, where we're getting in a position, then we're adding to our model. We wait for the right conditions and getting past that 10 o'clock hour or around there based on news. In other words, I don't want to be going in the stock at 9:58 in the morning when there's consumer confidence coming up at 10 o'clock, or maybe some larger numbers are coming out from politically or something at 10 o'clock that they've reported. I want to hold back, let that shakeout happen, and then try to find a way on board. So today, I'm going to walk you through that exact process of getting in that play. Let's take a look at that real quick. So again, you can see the gap was nice in here. I'm going to bring this chart down a little bit and give you a better perspective. You can see the gap was nice here. Coming off double bottoming that support here. The other thing was that CAVA also recently had the 8-period moving average, the dotted white line here, crossed the 20-period moving average. So when you think about the 20-period moving average, you can look at that, but you can also look at that as a midpoint in Bollinger's, right? Because if I drew this out, I don't use this very often, but I have it on here to show some of our team members. You can see here, when that happens, that is the midpoint. Always, it's by default, it's the midpoint. The 20 SMA is the midpoint of the Bollinger. So I want to know, am I above or below that 20-period moving average? And also, a lot of times when you ignite from the 20-period moving average, sometimes is algorithmic, sometimes it's just buyers coming in, but that's a great place to consider getting long. And I'll actually show you one that we did on McDonald's here, just briefly here before I'm done today. So again, we saw that gap up into here. Now let's drill down where the rubber met the road. And I'm going to go over here into I'm going to show you this, because I want to show you what this looks like on a 5-minute chart. Actually, I'm going to show you on a 2-minute chart. Let's take this out a little bit further, and I'm going to drill this down to a 2-minute chart. So once we started going here and I started to identify that gap list, they're just sitting there waiting. They're simmering for us to get past the 10 o'clock. Now, I will take some of those gaps on scalps, and I'll get in if the pattern sets up for maybe a breakout or a breakdown type of an early pattern. But once we start closing on at 10 o'clock, this is what I'm looking for. Now, CAVA was a bit messy off the beginning. I didn't think we had anything here. Did a little bit of a double top this morning here, about 940 or so. Came back down, took out the bottom, so it was a little bit kind of trashy. And then I looked back at that about 30 minutes later. Once we got past 10 o'clock and got past the news this morning, notice how CAVA came back up and began to creep back up right over the VWAP, which is the magenta line in here. Now, anytime a stock moves back above or below VWAP, it certainly has my attention. I may not trade it, but anytime a stock's moving above these bars after VWAP, I'm interested. Notice the trading did clean up on here a little bit here. Once it got over VWAP, it was trailing this little white line as it crossed VWAP, the 9 EMA on the white line. Now, where we entered the trade was where we were actually entering the trade. There's two different models in here. You can see the pullback was right in here. Now, when I saw this, and I'll take this fib level off just to kind of show you what I was looking at. So I draw the fib line from the bottom of the day to the top of the day. And if you're not using this, this is where you can find some of your more perfect setups. You let them drill around. The ones that have not worked itself down yet, it hasn't basically lost itself, this is the ones you have to focus on. So the drill back was that I was going to take this at around a 50% Fibonacci level. You can see right in here, it actually came back to 89.59. And right there, we were going to take this under the 61.8 because it was already at that area. And it went down here to 89.53, and then it moved back up. So coming into about 10:30, we were waiting on this sizable pullback. It came down to 89.97 to be exact. Well, our order was sitting here at around 89.75. We were just under, that's not that far. When you think about that, 89.86 on a 2-minute chart, there's your 89.59. So that little bit of Fibonacci was only 20 cents or 25 cents on a high-priced stock like CAVA. So if you look here, we didn't get filled here, but what I was telling the room, I said, look, if you don't get filled, you can go up a little higher and don't keep the stop the same, which I'll show you here, but also just make sure your share size is less. So if you have a $1 stop and you have 100 shares, let's say, for example, keeping it simple here, and you now are at a $1.25 stop, just lower your shares to 75 cents. That way your stop stays in place. There's nothing worse than moving your stop up and then getting stopped out of that stop and not the original stop. So anyway, you could have got in on the pullback or got in maybe just above that area, right at the Fibonacci level at around 50% to 6 to 38.2 on the pullback. That's what this was from the top to the bottom in here. And as we began to kind of come down, had this thing would have triggered in here, you can see that pushback was higher. So whether you got the higher one and you basically boxed in the entry, meaning if it goes higher, I'm going to get in with this many shares. If it goes lower, I'm going to get into this many shares, but this is my solid stop. I'm not changing that. But the shares may change to keep the stop the same, as I mentioned here. And again, when I take these pullbacks, they also are a part of just being able to have tighter stops, because when you're taking breakouts, a lot of times they break out and they pull back a lot. But when you're taking pullbacks, you're giving a lot of the stop up, which is great because you can go with much tighter stops. And when you get the right rebound in these stocks, they go. So if you look at this $89, actually just under around $89, so a little bit less, that top of that area here was around 92 and change, right? So on a 75-cent stop, which is what this would have been, that's about a 4-hour play right here on CAVA. Now, again, there's 10,000 stocks out there at any one time. You have to have that list that we look for, and I'll kind of go through that list with you in a second here, but you can kind of see that that was the perfect setup. There was very few stocks that did this today here, at least the ones that hit our gap list. If they keep faltering and don't get back above that VWAP, I'm not interested. But the thing that I have to trade is that I want that stock to be up at or right around or at least above that VWAP on that pullback. I want that stock not to be violating in the short term. I want to see bottoming tails coming in at 50%. And if you use the Fibonacci trails, these don't let you down very often. So many traders just arbitrarily get in at some trend line, or which is okay, or some moving average. I'd rather get in at a trend line than moving average. And they're arbitrarily in. Now, as this begins to move up, we add to the position and we raise our stop. So that would be called add our position, but we reduce our stop loss to keep everything the same. Once we get going, we get to 1R, we actually start taking profits at that 1R mix. And I'll show you that on another trading day. But this is a phenomenal. This would have been about a 3.5, 4R trade here. And when I do these, I'll actually post our trades and our P&L and this moving forward. So be sure to subscribe to the channel so you'll get these trade updates the same day as they actually happen, so you can see how they actually worked out. If they don't work out, I'll post them too. But I'll show you the ones that work and the ones that don't work here. Nothing's perfect, but it gives you that. This is one of the perfect entries for day trading. You hear people that talk about 30-minute highs and lows. I don't disagree with that. I just don't play those because the range is so wide. My stop is so wide that you'll never hit your targets. You may hit a half-hour target in there. I'm just not willing to put that type of risk. I want to get down, crunch down, get a small stop, and get a dynamic run to be able to get that risk-reward in balance a lot more. The way that I have it set up is that you can actually take, have a 3R, or you can have, let's say, let me actually show you, what we do is we try to make sure, that we could win 6, we could win 1 trade and lose 6. Now that sounds dynamic, but when we have a winner in there, the way that we go in for half position only and begin to add on the new move, the way that we strategically do that allows us to have a very high Sharpe ratio. So it's about 6. So about 6 trades to winners. If I had a loser, I'd be break even. That's how you want to get yourself into trading. But if you don't have the right catalyst and the right setup and the right framework, like I'm showing you here, you're going to get into loser, and you can just keep losing it 6 times, and you got to win 1 to get back to break even. You got to have the right setup. You got to know exactly what you're looking for in that. Took off. You can see right in here, this thing just fired up. Right when it hit 50%, it fired up. We added a position. We averaged in at 750. Came the other day, we were already almost 10% up, about 8% up here at the close of the day here. So we expect this thing to go back to 316. We're going to take a partial around 316, but ultimately we see 320 in the cards. Right back to the top here, we're going to pull the trigger at 320. That'll give us probably about a 60% gain in this option McDonald's. Again, outside of the market kind of getting hammered in here, this is a great opportunity in McDonald's. We saw what happened yesterday. We saw what happened to bigger candles. You don't want to enter on that big candle, but you find that way in on the pullback. And you take a couple shots at it. Years ago, I would never add to my position. You can only add your declining position if you have a plan for that. Don't ever do that if you don't have a plan. Our plan is very specific. We add once, in this case, up to 3 times total, but 2 because the price is a stock. And then once we add the finals there, we have determined what our stock price is for the day. So it goes down here, I'm getting out of the option. That'll keep your risk at around 20, 25%, no more than 30, because if it's set around here until later, you're going to have some decay in those shorter time options. So McDonald's off to a great start in our entries today. We're in 2/3 of a lot. We'll probably end up staying there. And that also allows you to trade a lot deeper, a lot heavier. So instead of trading maybe $2,000 a trade, I've traded as much as $10,000 per trade. I backed off here in the market the way this rate of change has been high and the VIX has been moving higher. But it's not hard to trade $4,000, $5,000, $6,000 risk because that's going to zero. I factor everything going to zero. It never will for us, right? Because of time. But that's how I'm factoring it. So you could be in with 6, 8, 10 contracts sometimes. It doesn't take but a 30% move to make $1,800 to $2,500 if you find the right strategic. Notice how I did the Fibonacci on both the pullback to get in off of the longer dated option and also off the intraday. These Fibonacci's timed with great gaps on the daily and 60-minute chart, 65-minute chart, provide some of the most perfect entries you'll find in trading, especially these days. So I hope this was helpful. Look forward to seeing you in the room. Come in, take a free trial. just come in and watch us trade here for a while, just to understand exactly how we do this. And again, subscribe to the channel. I'll put more of these out so you can kind of see the winners and the losers, because it's important to see that they all don't work, but the lion's share do, and that's what we're after here. So you guys have a great rest of the day. Talk to you in the room.